Well, good morning, Yogendra Rana here. The topic of the day is Contractors All Risk Insurance. Contractors All Risk Insurance. See, this CR policy is part of engineering insurance. Engineering insurance refers to the insurance that provides economic safeguard to the risks faced by the ongoing construction project, installation project, machines and equipment in project operation. So engineering insurance is a type of insurance policy wherein a wide range of risks related to engineering are covered. It is a comprehensive insurance policy that offers economic safeguard against risk faced by ongoing construction projects, installation projects, and machines and equipments in project operation. Since this industry is about creating and designing construction and building, there are increased chances of related accidents and perils. Thus, engineering insurance policy caters to different forms of uncertainties that are associated with on-site construction, including plant and machinery uses. Question is, why CR policy? India is among the fastest growing economies in the world, with an upbeat outlook towards rapid infrastructural development. Railways, industrial units, housing facilities, dam flyovers, power plants and other such construction projects have been on the rise. But the rise in these infrastructural projects comes with the rise in material risk. The possibility of damage to the construction material, machinery or the constructed portion due to environmental and man-made hazards can lead to substantial losses for the contractors. There are different kinds of engineering policies. Basically, they are divided in two sections. Annual policies, which includes contractor plant and machinery, electronic equipment insurance, machinery breakdown insurance, boiler and pressure plant. The other one is long-term project insurance. This long-term project insurance includes contractors all risk and erection all risk. Other engineering policies means the bifurcation is on the basis of the phases, that is construction phase, which is based on the period or one-time policies, which includes contractor all risk, erection all risk, marine erection, advanced loss of profit policy, and delay in startups. As far as operation phase is concerned, machinery breakdown insurance, boiler pressure plant and insurance, machinery loss of profit, contractors plant and machinery, civil engineering completed risk, electronic equipment insurance, deterioration of stock insurance. In the contractor's solid insurance, period of cover is important because cover shall commence from the commencement of work or arrival of the first consignment at the project site, whichever is earlier. The cover expires when the completed part thereof is taken over or put into service, or the date specified in the policy, whichever is earliest. In case the work is not completed within the period specified in the policy, then the policy can be extended, but it is not renewed. So, basic difference between CR and EAR is that both are all risk covers, but the determining factor is value of erection and installation works. This value of erection decides that if the value of erection and installation work is above 50%, then the CER policy will come into force, and if it is below 50%, then CR policy will come into force. Unique features of CR policy includes, in majority of proposals, there will be risk inspection by the company's engineer. Duties of utmost good faith applies, hence proposer has to declare all material information. Policies can be issued in the joint names or more parties. For example, principals, contractors and subcontractors. Almost all classes of engineering insurance are controlled by tariffs, which prescribe standardized proposal and policy wordings. The sum insured is adjustable at completion of construction on the basis of the actual value. So the CR policy applies to all risks located in India for which the value of the civil works involved is more than 50% of the total contract value. Principal contractor or subcontractor can take it. The target segments are government contractors involved in government projects like road construction, bridge construction or building construction, and builders and developers of the township. These are few images which are showing where the CR policy is required. Coverage includes material damage section. Section 1 is there. That means the policy covers the property against loss, damage or destruction by any cause unless or until specifically excluded. CR policy provides an all risk cover. That means that almost any sudden and unforeseen loss or damage occurring during the period of insurance on the construction site is indemnified. Then section 2 covers third party liability. The policy covers third party property against loss, damage, destruction by any cause and third party personal injury by any cause. Material damage, the policy covers the property of the insured against loss, damage, destruction by any cause. That means it covers the fire perils like fire, lightning, explosion, theft, burglary, windstorm, flood, inundation, earthquake, landsliding, rock sliding and subsidence. Construction faults like defective material, workmanship, collapse subject to exclusions. Human error means lack of skill, negligence of workers, and other perils like air crash or blastings. There is another image which is showing the real loss which took place at the Delhi metro site. Now the question is how the sum insured of the policy will be decided. The sum insured includes the marine imports landed cost at site, marine indigenous landed cost at site, cost of construction, permanent civil engineering work, half the escalated value if escalation is opted for. The sum insured should represent the completed value of the contract work. On completion of construction, inclusive of all cost of materials, wages, freights, custom dues, construction cost and material or items supplied by the principal. There are certain add-on covers. Add-on covers differs company to company, but normally the third-party liability, surrounding property of insured, escalation, removal of debris, CPM and maintenance kind of add-ons are available almost with all the insurers. There is another image of building under course of construction which got damaged. Now the question is, what are the risks excluded from the cover? The willful act or willful negligence of the insured or his responsible representatives, loss discovered only at the time of taking an inventory, loss or damage due to faulty design, consequential loss of any kind such as penalty for delay, non-fulfillment of terms of contract, the cost necessary for rectification or correction of any error during construction unless resulting in physical loss, and bodily injury to or illness of employees or workmen because they are covered under the workmen compensation insurance. Third party extension can be taken. Third party wider coverage. For that, insured has to opt for any one person and any one accident limit. See the another image of real loss under course of construction. Building in Ghaziabad collapses. 2 passersby is killed. As far as claim settlement is concerned, there could be 2 kinds of losses: partial loss and total loss. Cost of repairs necessary to restore the property to the original condition immediately before the loss, less salvage, less under insurance, less excess is paid if the partial loss is there. And if the total loss is there, actual value of property indemnified immediately before the loss, less salvage, less under insurance and excess, that is restoring the product completely or replacing it to the condition it was before the unforeseen damage. In the event of loss or damage, the insurer shall maintain in force during the period of insurance for the sum insured. So the reinstatement of sum insured is necessary. Rating depends upon company to company. Mid-term cover can be given on the basis of the premium shall be charged from the commencement of the project. A small term could be less than 1 year, maybe 3 months, 6 months, 9 months. Extension is not given in case the project does not complete within the given period. The policy is extended, not renewed. Insurer can be changed, but they will charge the premium from the commencement of the work date. Installment facility is there, higher discount facility is there. 50-50 clause is there and the 72-hour clause is there. Thank you.